The concept today, fat green, far away from your key moving averages. The removal of green far away from your key moving averages. Boom! We watched the green disappear 25%, another 25%. Now it's half tail, half green, 75% tail, 25% green. Saliva begins to drip down the corners of your mouth. You get ready. All green gone. Boom! 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 You know the deal. We get excited about these moments, right? That's our moment to strike. Protective stop above the tail. That's the concept. Guys, this is my trading platform. Now, BABA was my main play this morning, as you can see in the upper left-hand corner of this screen. All the charts, for the most part, are BABA, with the exception of the chart on the right side, or at least my right side. My total gains for this morning, this was trading over a 10-minute period, $6,200, but the vast majority of that came from the BABA trade. And so I'm going to use the BABA trade today to talk about a very valuable trading concept, technical concept, that I typically deploy virtually every single day in the markets. If not every day, definitely every other day. So if you get this technical concept that I'm going to teach you today, it's something that you're going to be able to repeat for yourself over and over and over again. And this is one of those concepts that I believe can be rewarding for a big portion of your life, as it were. The play was quite simple. That first of all, I am looking, guys, at a 2-minute chart. And most of you who follow my work understand that most of my traders and I predominantly focus on the 2-minute time frame. The two trading time frames are 2-minute and 5-minute, but the 2-minute is the most dominant time frame, and it is the best time frame if you are still in development mode. All right, other time frames can eventually come into place, but it is my experience that when you're training and when you're growing and when you're developing, it is best to operate with the 2-minute time frame. It's that perfect time frame that gives you the perfect frequency of trades. If you go to a bigger time frame, your frequency drops. And if you go to an even smaller time frame, your frequency increases beyond where it should be. So the 2-minute gives you the right amount of frequency of opportunities and trades. Remember, your progress is going to largely depend upon your experience. And so if you're building your experience too slow, you're extending your journey toward that ultimate mark of trading mastery. If you bombard yourself with too much experience at the same time, you will miss virtually everything. So the 2-minute gives us the perfect frequency of opportunities. Every bar represents 2 minutes of trades. Obviously, each bar that was green ended up higher than where it started. Each bar that's red ended lower than where it started. All right. And the tails or wicks are the extreme movements from the open and or the close. Now, what you'll also note is that I have 2 key moving averages on the chart, and these are our main 2. It's not the only 2 we rely on, but it's the main 2. It's the 20-period moving average, that's the blue one. It's the 200-period moving average, that's the red one. To the left of the chart, you will find that this is yesterday's price data. We gap up in the morning. So this stock opens considerably higher than the last price it traded at yesterday's close. So that's called a gap to the upside, or a gap up open. This second bar that I want to draw your attention to, and this is where the concept is going to come in. I want us to go over how this bar was formed. And I'm going to draw it to the right of the bar. Every bar starts off with a dash. That's the first transaction. Now, from this dash, from that first transaction of the 2-minute period, the bar can start moving up or down from that opening transaction. In this case, BABA began to actually move to the upside. So I'm going to make that green. It began to move to the upside, creating a fat green bar. So this is the fat green bar part. Doesn't look like that now, but that's what it was at a certain moment. We're watching BABA gap up to the upside, way above its key moving averages. It's already far away. It's extending the distance away from the key moving averages by moving up additionally to create that bar. This bar can be bullish, and it also, which means that if it's bullish, that type of bar can mean that we're headed higher. That bar can also mean we're probably closer to the end. So what's the difference? This bar sometimes can lead to greater upside, but sometimes this bar can lead to downside movement. Now, what's the difference? The difference is where that bar forms. So if that bar forms near your moving averages, the odds are that there will be more upside. Okay, note here that this fat green bar happens close to one of the key moving averages, and there was more upside. But this green bar quickly gave way. All right, this green bar quickly gave way. Why? Because it has formed far away from the key moving averages. So that's the difference. If a fat green bar forms near your key moving averages, the idea is that this bar has a higher probability of carrying forward, following through to the upside, continuing its nature. But if a fat green bar forms in an extended position, far away from everything, I call it Pluto land. It's far out there in outer space. That green bar will likely give way, or at least we're closer to the end than we are to the beginning. And so that's important to understand. Remember when I was saying you have to understand location concepts to trade properly, because location is actually, in many respects, more important than the event that we're playing. In this case, we're playing off the notion of an elephant, a bull elephant bar. This is what I call a bull elephant bar. But that bull elephant bar can actually mean we are just starting something positive, or it can mean we have just ended something positive. And again, that's based on location. If this bar forms near one of the key moving averages, it typically means more continued green. If it forms far away from the key moving averages, it will tend to mark the end, or suggest that you are closer to the end, that there's not going to be much further green produced from here. And so this is what we saw this morning. We saw this bar become fat green. Now, there was no red there yet, but what begins to happen? This bar, 25% of the bar starts to disappear. So now you have a bar like this. It's green, but it has a little tail at the top. Then another 25% of the bar disappears. Now the bar looks like this: half tail, half green. And eventually all of the green disappears, but this bar looks like all tail now. It's 100% tail. So we go from all green to some tail, but mostly green. Then we go to half tail, half green, and then we go to all tail. When a green bar, a fat green bar, extended well above its key moving averages, fat green bar, well above its key moving averages, if that fat green bar gets removed, was completely eventually removed to produce that bar, boom, boom, boom. That's when we jump into that bar with a short position and a protective stop above the high of the bar. Why are we betting to the downside? Because we're betting that this far distance away is now going to be brought back to near. And that's all markets do. They start off just like this, guys. Check this out. They start off near. Here's near. They move away. Then they come back near again. See, we're back to near again. And then They might act near again, and then eventually they'll move away again this way, or they'll move away again that way. You can move away up or you can move away down, and you can gap yourself far away too, as Baba did this morning. Baba didn't trade away, it gapped itself away and then produced a nice fat green bar. Sorry about that. We'll make sure that's green. And this bar was eventually removed little by little, little by little. And when all of the green was gone, boom, we just drill the stock for a short on the erasure or the removal of green far away from the key moving averages. That short there with a stop or protective stop above the high of the day in this case, or above the green that was removed, and the rest is basically history. Now, I've taught you the color game. If you continue to play the color game, not only are you shorting here on this removal of green far away. Remember, this is the concept that I'm teaching you today. The removal of green far away from your key moving averages. I'm going to repeat that 2 more times. The concept today, the removal of green far away from your key moving averages. Can you imagine how many traders got stuck in Baba right there on the buy side, on the long side, because they don't know this concept? They're hanging from this pole, still waiting, guys, still waiting and hoping that Baba comes back. They bought that green right there, thinking, believing that Baba's good news today, Baba's strong opening today was going to continue. You know that this far away from your key moving averages has low odds of continuation. You now know that if this green, if that green disappears, you know, boom, that is your strike moment. You also know to protect yourself, should this not work, right above the tail. And you should know if you start to combine the other concepts I've taught you throughout all of my master classes right on this channel, that you can now that you're in, you can start playing the color game. What's the color game? Green bar, eliminate the next green bar, boom, add right there. What's the color game? Green bar, eliminate green bar, boom. Another green bar, eliminate green bar, boom. Another green bar, eliminate green bar, boom. And you can continue to do this as long as you want. And there you have it, guys. Fat green bars that are removed, okay, far away from the key 2 moving averages, your 20-period moving average and your 200 on the 2-minute time frame. It's over. There are 7 parts of every single trade. You're supposed to know all 7 parts and know how to handle all the 7 parts of a trade. And once you know all 7 parts of the trade and how to handle all 7 parts of the trade, the rest of your journey is just experience. Taking a trade, getting through all 7 parts, boom. Taking the trade, getting through all 7 parts of the trade, trade 2. Taking the next trade, getting through all 7 parts of the trade, 3. And that's building the right experience. All right, continue to take these concepts I share with you and don't just move from one session to the next, guys. Let these things build on top of each other. Do you understand? Practice them, utilize them, search for them. Take a snapshot of the picture of this happening each time you see it. Keep a file. Flip through that file every now and then to see the same picture working over and over and over again. This builds conviction. This builds confidence. This builds visual certainty. This game requires work. This is the work. We're doing the work now. Do you understand me, traders? We're doing the work now. All right. It's not going to fall out of the sky. It's not going to just happen one day magically. We've got to do the work. This is the work. So what do you do now? You take this concept that I'm telling you, which works in reverse as well, and you look for fat green bars way away from the key moving averages, and you wait to see which ones get taken out. Take a snapshot of that, record it, take a snapshot, take an image, build a file of this, practice it, do some practice trades on it, make it yours. Initially, these concepts that I share with you are from my own experience, but you can't trade my own experience. You can't trade my knowledge. You can't take my 41 years, including the idiot years. You can't take my 41 years of trading and use that. That is mine. I can share some things with you, but you have to make those things I share with you yours. And the only way to make these things yours is to use them, is to mess them up sometimes, get them right sometimes, grapple with them, work with them. The work has to be done. So in the next few days, I want you capturing images of these things, this concept I spoke to you about. I want you practicing it in your own practice account if you can, until we have the next concept. Don't do nothing in between each session. Thank you so very much for your support, guys. I'm reading your comments. I'm loving every minute of it. I love your appreciation. I'm so glad that you appreciate what we're doing here on the channel. So please like the channel. I want you to make sure you're subscribed. Make sure you hit the bell in the upper right-hand corner, wherever that is. Turn all notifications on so that you don't miss anything. Things are going to get better and better and better. I promise you. Here, you're going to raise your level of market sophistication beyond what you ever possibly imagined. That is my promise to you. I love you very much. All right. Enjoy the rest of your trading day. Don't forget, buy Bitcoin every single week of your life. That's my message. All right, guys. Ciao for now. Boom.